Welcome back to my channel, and today we are doing the last part of process costing, in which I'll be telling about abnormal loss treatment, right? So let's begin. So we have this format which we have seen in previous slides also, in which we have a ledger account having debit and credit side. On the debit side, we have all expenses which we have incurred in a particular process, and you can see here on debit side we have direct material cost, direct labor cost, direct expenses, and overhead cost. We have certain opening WIP, that is work in progress, means anything which is given to you in the question which is carry forward from the previous month or previous year, right? And similarly we have the closing of all these things, like closing WIP, it must be given in the question to you, and finished output, anything can be given to you in the question. So the balancing figure will be the abnormal loss or abnormal gain. Normal loss is usually given to you, that is the amount which is expected to be lost. So the balancing figure either could be abnormal loss showing on the credit side, or abnormal gain which is depicted on the debit side. Debit side. So let's move on. So this is the only slide which give you the brief overview of the accounting for losses and gains in process costing. So before I explain you this slide, let's take an example. For example, we are manufacturing a cookies, right? We are manufacturing cookies, and it is expected that normally our input from a given dough will be like 10 units. We are expecting 10 units is your expected output, and out of 10, 1 unit could be wasted, maybe due to heat up or anything else, so in packaging also. So you expect 1 unit is the normal wastage. So can I say the actual expected output is 9 units? But uh, let's take an example. In one of the cases, your actual output is just 7 units. 2 more units are lost. So that will be abnormal loss. But on the other hand, if your normal output is, let's say, 11 units, so that will be the gain. That will be the abnormal gain. So now you can have a look on this. We have input units, that is the units which we are carrying forward from the previous month, and this is the normal loss which we expect. So then we will get the expected output, which is 9 in our case, but your actual output is just 7. So the abnormal loss will be 2 units as shown here. So abnormal loss will be 2 units, and vice versa will have a abnormal gain if it is more than the actual output. Now the key differences between the two are: the first one is the source. Normal loss occurs due to the internal factors. Right? We cannot expect, and we are somewhere know this thing that it is going to happen, right? But abnormal loss, we can't, it's not planned. So it is due to external factor. Second, normal loss is of recurring nature, so it happens again and again in every process, right? But it is accidental. If you talk about abnormal loss, they suddenly happens. For example, in the current situation of lockdown, certain things are not expected, they are happening, it right. The third one is estimation. They can be estimated. Normal loss can be expected from advance, and we know this from the previous experience. But abnormal loss are always unexpected, accidental in nature, and they cannot be estimated, right? We cannot make provision for this. Now fourth point is access to insurance. They are not insurable because you are 100% sure of it, right? You know this loss is going to happen, so nobody is going to do insurance. Insurance is done only for those things which can or cannot be there, like where there's a probability. So abnormal loss, for this you can have, yes, insurance loss. Avoidable, normal loss is unavoidable, it is not in our hand, it has to be done, it will occur. And abnormal loss, yes, it is avoidable to some extent. Next slide. Accounting for loss and scrap. So how to do accounting, major part. So normal loss we have done in the previous section, in which no entry is passed because we know this thing and we apportion the amount, or we try to sell off the normal loss. And if you talk about abnormal loss or abnormal gain, we used to pass a general entry and we make a abnormal loss or abnormal profit account. Next we have the summary. If you see the brief, in brief, normal loss is the loss apportioned over the remaining number of units, which is left over. But if you talk about abnormal loss, it is not included in the inventory. We haven't planned for it. So we are treating it as an expense. This is the extra expenditure we are incurring, right? Just have a look on it. Then we'll move on to the practical aspect. Yeah. So just look at a small practical first, then we'll move on to the full-fledged question. And in this question, we have been given 50 units of material and the cost of per unit is 1 rupees each. So you can side by side see the solution also. We have 50 units of material costing 50 rupees. And we have been given the expenses, extra expenses of 30 rupees. So the total expenditure incurred is 80 rupees. And the closing figure given to us in the question is just 40 units. We have produced 50 units, but the closing figure is 40 units. Now let's see where is the difference of 10 units. In the question, we have been given the normal loss which we expect in a manufacturing process is just 10%, that is 5 units. So 5 units is the normal wastage. So can I say remaining 5 units is the abnormal loss. Now let's see the computation of its cost. Now the scrap value per unit of normal loss is given to us 0.25. So if you see on the right hand side, credit side, 5 units of normal loss is sell off for 0.25. So 5 into 0.25 paisa will get 1 rupees 25 paisa. So the formula is very simple. जब हम normal cost निकालते हैं cost per unit, the simple formula is कि total cost incurred divided by total units. Similarly, in this case, what we are going to do, हम उसमें बस normal cost को include करेंगे, normal loss को. The numerator will remain same, total cost minus the value of normal loss. यहाँ पे total cost कितनी है? 80 rupees. You can see in the chart. Now minus value of normal loss, which is 1.25 paisa, divided by units. Total units produced is 50 minus the normal loss in units, that is 5 units. So the cost per unit is 1.75 paisa. Now how much is the abnormal loss in our case? 5 units. So just multiply the 5 units abnormal loss into 1.75 per unit. We'll get 8 rupees 75 paisa of abnormal loss. So we have got the balancing figure, which is 70 rupees. Now we'll prepare an abnormal loss account also, in which we'll do just the cross entry. We can see abnormal loss in the credit side. We'll put it on the debit side. We are just ledger posting. We are doing the posting. Okay? And on the credit side, we'll put the amount which we have recovered from the normal loss units, which is 1.25 paisa. So can I say the net loss which a firm has incurred is 7.50. इसको अगर मैं आपको और सिंप्लीफाइड लैंग्वेज में समझाऊं तो मेरा टोटल लॉस जो हुआ वो 8 रुपीज 75 पैसा का हुआ, बट उसमें से 1 रुपये 25 पैसे मैंने रिकवर कर लिया. सो माई नेट लॉस विल बी 7.50 rupees. Because some students asking me to ma'am use English, so somewhere I'm using English, somewhere I'm using Hindi, so that you can understand more. So just have a look on this. Then in the next question we'll do the same question, but the output closing figure will be changed. It will be 47, so that we can find out the case of abnormal gain. How to treat abnormal gain. Everything will remain same. We'll have the material cost of 50. We'll have expenses of 30 rupees. Normal loss of 5 rupees. Just closing figure will change. So let's have a look on the second part, which is abnormal gain account. Here it is. We can see material expenses as usual and normal loss just as before. We have been given the closing output is 47 rupees, 47 units. So can I say we have total units of 52? But the balancing figure will be 2, which will come on the debit side. You can see this is the abnormal gain. We haven't expected more than that. We have expected only 45 units, but our output is 47. So we can't do we cannot do net off. 5 minus 2 nahi karna kabhi bhi. We'll do the net off of the 2. So the 2 units is your abnormal gain. You can see here. Now we'll use the same formula. Total cost is 80. 50 rupees incurred earlier, then 30 rupees on expenses minus the cost recovered, that is 1.25, divided by 50 units, which is the total of the debit side, minus 5 units of normal loss. So The cost for 2 units will be 3.5 rupees, 3.50 rupees, which is shown in the debit side. And similarly, we'll do abnormal gain account and we'll do the cross entry. We'll share how much loss we have incurred or how much gain we have incurred and how much money is recovered. So the balancing figure will be coming on debit side. That will be transferred to the profit and loss account. Please have a look. Then we are moving to the next and the final part of this PPT, in which we'll do a full-fledged question carrying 15 marks, and that will be able to score full score. Just prepare 3 accounts and you are done. So without wasting time, let's move on to the last part of this chapter. See, this is a complete question we have seen in BCom, MCom also. In this, we have been given 3 processes: process A, process B, process C. In all the 3 processes, we have been given normal wastage of 3%, 5% and 8% respectively. And the selling price of the scrap is given as 25 paisa per unit, 50 paisa per unit and 1 paisa, 1 rupees per unit respectively in process A, B and C. Just read the question very carefully. If you recall the figures, you are done with the question, right? So this is very simple. We have been given certain expenses of each process is incurred. We have sundry material, labor, expenses. We have been given actual output, which will be the closing figure carried down, and the opening balance for process A is given as 10,000 units at the rate of rupees 1 per unit. So you can see process A account first. We have open units introduced 10,000 units for rupees 10,000. We have sundry material of rupees 1,000. We have labor of 5,000. Direct expenses of 1,050. The normal wastage is 3% of the total input. So total input is 10,000. 3% is not 3,000. That 3% will be 300 units. But the closing number of units is given to be 9,500 only. So the remaining 200 units will be the abnormal wastage. Let's see what is the cost of 200 units. We'll use the same formula. Total cost is 17,050 less the scrap recovered, that is 75 rupees, divided by total number of units, that is 10,000, minus the normal wastage, which is 300 units. We'll get the per unit cost and then we'll multiply it with the abnormal wastage of 200 units. We'll get the amount of 350. We'll put it in the right side, credit side, and we'll get the closing figure of 16,625, which will be carried forward to the process B. Also, we'll be forwarding the above given expenditures incurred in process B. So let's start with process B, process C. You can see here in process B and process C, we have been given the carry forward brought forward amount, which is 16625, just told you. Then we have sundry materials, sundry labor, direct expenses, and we have closing balance of 9,100 units given to you in the question, and normal wastage is 500 for the process B. So 5% of 9,500 units is 475. But in this case, if you see, we have the balancing figure on the debit side, means we have abnormal gain in this question. Then we'll use the same formula to find out per unit cost. The total which we will be using here is 16,625 plus 1,500 plus 8,000 plus 1,118, because the value of 225 is still missing for us. So you are looking at the solved question, that's why you must be thinking to take the total, right? So take the total cost less the scrap value recovered, which is 238. After that, divided by the total number of units, that is 9,500, minus the normal loss of 475 units. We'll get the per unit cost and then multiply it by the 75 units of abnormal gain. You'll get the income of 225, which is shown here on the debit side. Then we are carrying forward not the abnormal gain, we have to carry forward the closing figure of 9,100 units for rupees 27,300 to process C. Similarly, we'll add direct expenses, sundry material, labor over the debit side. We'll have finished goods from the question of 8,100 units, and normal wastage we have 8% in this case. So we'll get the balancing figure of normal wastage. Just make sure in every question it may happen you will have normal loss in every normal loss, तो आपके पास होगा ही, किसी इसमें आपके पास abnormal gain भी हो सकता है, like in this question. So need not to worry. Then we'll apply the same formula, and then we are supposed to make two more accounts, that is abnormal wastage account and abnormal gain account, in which we have to just do cross entries of the above three accounts, so that we'll get a balancing figure. Balancing figure can be on credit side or maybe on the debit side. So we'll transfer the balancing figure to the P&L account. So if it's a loss, it will come on the debit side, and if it's a gain, it will come on the credit side of P&L account. So have a look on it, and I would suggest please solve this question with your hand. Do it manually, only then you will get more clarity over it, because it seems to be easy. Yes, it's easy, but with practice only. Without practice, it will be difficult for you to solve it. And ideal time you require to solve this question along with the format is 25 minutes. Thank you so much for having a view on this video. Hope it's clear to you. And still, if you have any doubt, you can post comment over here or in the group, or you can contact me anytime. Thank you so much. Please like, share and subscribe my video. Thank you.